Okay, hello, it's Paul
Mm.
Green with another one of our Focus On panels, a weekly gathering of uh, um, experts in their field to discuss a particular topic. Today we're looking at do you think small businesses stroke owners raise funds and or invest in an effective way? So we're going to sort of see where that takes us today. So before we crack on with that, I'm going to let the current panelists sort of introduce themselves. We are waiting for one more. She's probably lost in the ether somewhere. So if she tunes in, we'll pop her on the screen as soon as she joins us and give her a chance to introduce yourself. So, young Rob Harris, do you want to let us know who you are and what you do?
I am indeed young Rob Harris. You're quite right, Paul. Actually, I was a financial advisor for about 1,000 years or so, and tried to retire, but my clients wouldn't let me. They kept knocking on the door, so I discovered I could give them information and guidance. And so that gradually formed itself into a money awareness course. So I teach people how to invest their money within the actual stock market arena now, mainly. So that's me. I'm Rob Harris. I'm a young, nearly 80-year-old, but I don't feel like it. And I'm enjoying life still. So that's me.
Okay, and Neil, do you want to let people know who you are and what you do?
Thanks, Paul. I'm not quite 80 yet, but on my way. Neil Watton from WKM Wealth. We are financial advisors and investment managers. We're independent. We're 2 and a bit years old as a business and going strong. So we're here to help people with their pensions and savings and planning.
But maybe if we had your age and my age, Neil, we might get nearer to Rob's age. We'll compare. We'll compare notes afterwards. So for anybody tuning in live or watching on a replay, you've got the ability wherever you're watching this to actually put a comment, and we can bring it up on screen and answer any specific questions that you may have while we've got this assembled brain trust on our screens right now. So let's come to you first, Neil. So I guess are you mainly involved with private investors as opposed to companies investing?
Yes. So I would think perhaps 90% of our clients are personal or people, but
Yeah.
we do help quite a few of those business owners invest. So that typically is where companies have built up significant amounts of cash, and they want or need to do something with it. It varies, but that does involve companies. It's often maybe a consultant who's just built up cash over the years, or we've even got a hotel business who have got significant amounts of cash, and if they don't do something with it, then well, it's just going down in value. In short, but there are different scenarios as to where that might work. But most people we deal with are private clients.
Yeah, and what have you seen over the years then, since you've been involved with private clients, when they come to you? Presumably, you do some sort of a assessment of where they currently stand, and then you advise them accordingly. So, what would you say are on the whole sort of small business owners wise at where they invest their money or what they do with it? Would you say when they come to you?
I guess they tend to come to us in circumstances where they may not actually know about the prospect of investing money through a company. It's not necessarily a mainstream thing that many advisors or businesses can actually offer. Not say they don't, but it's not necessarily mainstream. And so when you start talking to a business owner, it's typically focusing on their private sphere. But equally, then when you start talking about the business, what the plans, exit strategies, all that sort of stuff, it often then comes up or transpires that, oh yeah, I've got X in the bank in the company. And therefore it's like, well, what do we do with it? Quite a few of those people perhaps don't want to draw it out at the moment. So hence pay more tax. So they need to think about what they're going to do with it over the long term. But I dare say they're not necessarily typical, because the people who tend to come to us have built up significant assets, personally perhaps, as well as in a business. So not saying that they're typical per se, but equally I dare say there'll be a lot of businesses out there that maybe aren't quite in the position that some of the ones we see are.
Mm-hmm.
So then, that's how my experience is. They're in good shape, they've built up cash, and they don't need a plan to what to do with it, but they need their eyes opening to options. The option might be they want to take it out. It might not be. It's whatever suits their needs.
Mm-hmm.
But I'm sure they're not typical. But equally, I'm sure the bit that is typical is that they've not necessarily thought about what that long-term plan is. I'm
Yeah.
pretty sure that's going to be quite consistent for a lot.
Yeah. So Rob, you've been dealing with people and their money since the dinosaurs roamed the earth. So what are some of the things that you've seen in the years where what do you think? Do the people you come across, are they wise in terms of their investments, or do they need a lot of education in terms of what they should be doing with their funds?
Yeah, well, I'm just to say, I deal almost exclusively with private clients, really. Although, of course, those clients are sometimes sole directors of limited companies.
Mhm.
They're just self-employed people. But I deal with employed people as well, of course. But I suppose the first two categories are my main area. Um, I just ruminating on the topic, really, and realizing that in my own investment strategy, because lots of my students are doing this, I've just been investing £100 a month into the FTSE 100 index, just simply tracking it. And in just under 2 years, I discovered I got a return of 30.68%, which, is about 12-13% compound, perhaps, really. So I just wonder, it's quite interesting, I think. I believe I'm right in saying, and Neil, you might be able to support this, that if you're a limited company and you've got money in your account, you could actually invest that in stocks and shares and in other investments, subject to your articles of association allowing you to do that, of course, and so on, you see. So I get quick question is, if you're a sole trader, are you making a return of 30.68% in your bank account for your expenditure compared with putting it into your business? So there's a bit of a tempting. I don't know, Neil, have you got any input on that? You got any thoughts on that one at all?
Yeah, I suppose so. Yeah, you are right, and companies can invest. It's like I said before, it's not necessarily a widespread or commonly known thing. Equally, like you said, Rob, it will be subject to what their limited company structure is, who owns it, what the shareholders think, the directors think. There are other complications like what might it do to, is it then a trading business or an investment business? Does it affect what was called entrepreneurs relief? These are there's numerous things that people need to be mindful of. But to your point, Rob, if you're a sole director of a limited company and you have built up cash, if you've just left the cash, which most often do, then it's certainly not going to get 30.6% over a few years, and it's just going to go backwards by probably the same value.
Absolutely.
But it's opening the eyes and making it aware. What are you going to do with it? Investing is one option. It's probably not right for many businesses for various reasons, but equally for some, it might be. And, an example, I've got a client who, IT consultant, two shareholders, husband and wife, they've got 300 grand in the bank and they continue to build cash. Their business is just him pretty much as a consultant. So what are they going to do with the cash? Well, they don't want to draw it because they pay a lot of tax. They don't need it. So what do we do? Well, let's look to invest some of it for the future, and then that can become part of their future legacy and income stream.
Yep.
So that's sort of right for them in their risk profile, the setup of the business. Whereas if you're trading, like buying and selling stuff, and you need cash, and maybe you've got work in progress and stock, it's probably a million miles away from being appropriate. So it's very dependent on the structure and the business type.
Yeah.
But I dare say they're not necessarily thinking about what to do with it because it's just not a well talked about vehicle.
Yeah, of course. Yeah. Okay, that's good. That's good. Yeah.
I guess in general, with the current climate, how it's been over the last year, with sort of interest rates being low, etc., and inflation going up, then I guess if money is just sitting in a bank, it's probably becoming worth less as time goes on rather than more. So, what would you say to people if they are sitting on a bit of a cash pile at the moment? What do you think they should be considering doing? And I appreciate that it's not a one size fits all, and that it depends on the circumstances. But is there any sort of generic recommendations, Neil? I'll come to you first.
I guess the first thing would be to look at what's your plan for the business. So cash flow planning. Because, like I said, you might have 100 grand in the bank today, but you might need it in a month's time to pay corporation tax, say, or to do something with. So don't just focus on cash. Look at what you need it for. What's the profitability of the business? What are you drawing? So it's thinking about what you need going forward in a reasonably short term, particularly if investing, some of it was on the cards or, quite thinking about it, because that's got to be long term. So you've got to be able to sort of put that cash aside for a long term. But there are savings accounts for businesses, like there are for us as individuals. They don't have any tax ISA type things out there for corporations or businesses, but there are savings accounts. That client I mentioned before, they used to use fixed term savings accounts where they might get a bit of interest, a bit being whatever, not a lot. But there are out there. But again, you end up tying up the cash typically. We as a business have a instant access savings account because we have to hold quite a lot of cash because of our status. It's earning absolutely nothing, but we can't do a lot with it because we have to, in theory, have it there to access.
Yeah.
So it is about thinking what you need it for, what it's there for, what you're going to do in the coming year or two. But there are some options out there, but I dare say they won't be paying much either.
Yeah.
Still.
Mr. Harris, your views?
Well, I mean, I'm constantly preaching to people that cash is not the place for your money now, other than, as Neil is saying, you may have particular needs or plans for it, and you need an emergency fund. So whether you're in a limited company or just a private person, we have to be very real about the fact we're heading for 11% inflation. And people are beginning to be comforted a bit by the fact interest rates are going up in my bank account or whatever. But even if you're getting 2% return, which feels better than 0.5, that psychologically feels so much better, but it's still very dangerous because, of course, you're losing 9% in a year on the value of your money. So that's why, of course, I would say, being a teacher on investment, you need to learn how else can you invest your money? What is the risk involved in that? How can you reduce that risk and so on? So I do think people need to be very aware there are other ways of investing money other than just living in the bank. And a lot of people don't seem to realize that. So inflation is a thief. It comes into your bank account and it steals the value of your cash, whether it's a limited company or whether it's you privately.
Yeah. Do you think that people tend to leave money in the bank a little bit like, way back when people would stuff the money under the mattress because they knew it was there and it was tangible and it was, they could touch it and feel it. And I guess moving on now, the bank is that under the mattress type thing. You can see it in your account. It's there. It's pretty much, I guess, 99.9% secure. It's not going to go anywhere, even though it's losing value. Do you think that's the reason that people tend to leave it in there, Rob? What are your thoughts on that?
I mean, I go back in history where people with their building site accounts, they would have a book and the amount of their money was written in that little booklet, and they'd like to pick up the book and show me the amount they got in there. They can tangibly touch it, feel it, see it. And because the world has moved on from those days, obviously, But yes, you're absolutely right. It's that perception of safety. But the money in the bank is not safe in that sense, because if it's losing its value, it's not safe, and therefore, when you look at investment, stock market investments, unit trusts, all the rest of it, you have to hang on a minute. If inflation is 11% and I'm only getting 2%, I'm guaranteeing myself a value loss of 9%. Okay. And if I put my money in the stock market, hey, there's a risk out there as well. But actually, in the stock, it's not a guaranteed loss. And very often our regulators make it look as though people never make a profit in the stock market. Please be aware you might not get back as much money as you would have cost. But if you cross the road, you might get run over as well. So come on, people, Anyway, That's me just bubbling over a little bit, but there you go.
That's all right. It's allowed, Rob. So Neil, what about you? That same sort of thing. Do you think there is because obviously any investments, there are risks associated with it. There's no guarantee as Rob said, in life generally, let alone with the finances. So in your experience, do you find outside of other circumstances that might mean that the organisations need to have a lump sum in the bank, that there is that they feel there's that security that they can see it on a bank statement?
Yeah, absolutely. Plus, we've been living in pretty low inflationary world for years, so it's perhaps not been so painful from a what's the value of my cash doing. Interest rates have clearly been very, very low as well, but inflation has equally. So it's probably been less on the radar about, oh, my cash is losing quite a lot of value now, whereas in the recent years it was perhaps not so evident. So that's perhaps, but also it's like I mentioned before, it's depending on what sort of business. And often if you're dealing with people who are sole limited companies and that sort of stuff, it's almost like an extension of them as opposed to a business in a way. So they might be looking at it, well, that's my future. Therefore, I want to keep it safe, cash. They know cash until maybe they've got rid of the mortgage, paid that down, or especially if they're more risk averse, they'll just be thinking, actually, I can sort of touch my cash, and therefore I like it. It's a safety blanket, irrespective of what it's really doing for their future. It's very much the case, but equally, if you've got a kind of inverted commas proper business that's trading with lots of staff and that sort of stuff, they tend to be run quite differently from a mindset.
Yeah. I think if I can just say, Paul, one of my greatest joys fairly recently is I can think of 3 of my students, I would call them, not clients, because they are learning with me. And two of them recently would have been people who said to me, this is nothing that they would have done in investing in the stock market, unit trusts and all the like, nothing that they would ever have done without the education and knowledge that I'm able to share with them. And just lately, one lady who was very timid, very nervous, she's been with me now for about 2 years, and she actually said to me, I'm really enjoying this, Rob. Now it's become a real interest of mine. So look, it is helping people over that barrier of perception that cash is safe. Because when it's losing value, I'm sorry, it's not safe. It's losing value. It's becoming, I often say cash becomes worthless. Then you've got to divide the word worthless into 2 words, worth less. Sometimes if you use a bigger picture like worthless, it makes people stand up and think a little bit more. My cash is worthless. No, it's worth less in a year's time.
Yeah. So we touched on this a little bit already, Neil. So inflation is on the up at the moment. Cost of living is on the rise. We're long overdue a recession, I guess, if you look back in history in terms of when we should have had one, and and interest rates are starting to creep up. So are you finding that clients are coming to you now and rejigging what how they've got their current level of investments, or do you envisage that will happen as time goes forward? What are your thoughts on that?
Not really found people coming, as it were, out going, oh, I need to change, because the idea is that you're far enough out from whatever the next step of life, and often that's retirement or something else, that it's not, oh, it's a month away now, we need to do something. So it's not so short term that we've had any real reactions. In a way, it's been a bit of a test, recent markets and now inflation, because we said, this will be bumpy. It will. Inflation, I don't think anyone really foresaw it being quite this crazily high, but nonetheless, it generally doesn't change that too much. I guess it does remind people that inflation will come back again, and it probably will again one day, once it's died down a bit. But yeah, it's not too much knee-jerk reacting. Having said that, there is also people coming out of the woodwork a bit more to go, actually, they get the problem with inflation and what's going to happen, so they need to do something more than they have, whether that's investing in something or whatever the plan is. Or it might be they think, actually, I need to work a bit longer. So it's definitely causing some more thinking. but it's not necessarily a change to what they've done. It might be just being a bit more proactive about what they could do going forward, and being maybe a little bit more open to the concept of investing a bit more than they have. That safety blanket of cash that we talked about, they might be realizing isn't quite so safe.
Yeah. And what about you, Rob, with your students? Are you seeing anything? Are they getting a bit nervous in terms of all these rising in terms of costs, utility prices, petrol prices, etc., etc.?
Yeah. Okay. I mean, it's moving away from the business arena a bit if I talk about this for, but it might be helpful, I think, anyway. Yeah. I mean, you see, we're in a period of extreme volatility and uncertainty. It's been difficult to know where to invest money over the last handful of months, really, in many ways. But I think where you put your money today depends on your outlook, and also depends upon your needs, as Neil is saying, and your timescales and so on. But do you really think that war and the threat of war will actually increase? If you do, then your portfolio needs to reflect that. If you actually believe that the war threat will die away, then you're looking at a situation where I suppose markets were coming out of COVID quite kind of nicely, and then they're hit by the Ukraine war and so on. And so you're looking at a very unsettled market with loads of debt across the globe and so on. So you've got to fashion your portfolio around those factors. And I would say that the risk of any investment is not necessarily in line with what a textbook will tell you. It's in line with the economic conditions around you at the time that you hold that investment, and also the political conditions, you might say, as well. Okay. But here's a strange thing which people don't talk about very much, and that is that in volatile markets, if you have a spread of investments across different kinds of assets, the chances are that one of those assets will rise to a profit point, as I might call it, while others are just bumbling along. And so it is. I've got at least 3 people who, in the last year to 18 months, have drawn from profit points. So when an asset rises to a high point, 5-6% of return, they press a button and they take the 5 or 6% out. So if, for example, they've got £4,000 in one asset, 5% is 200 quid. Press the button, £200 goes out. Within 2 or 3 days, it's in your bank account. Helps you pay the bills. So, these are different attitudes and ways that don't fit in with the normal way of thinking, because we always think long term. You must always have your investments there for 5 years to allow for the ups and downs and so on. That's what the normal pattern is, but the world around us changes, and there are new opportunities within those changes that we have to identify, I think.
Yeah, I guess it's looking at now money and next money, isn't it, really? So, yes, investing for the future, but also...
Yes, now money. Yeah, you watching my videos, weren't you?
Well, I've done your money awareness course, Rob, and I do listen to your words of wisdom, so I've picked up a few things along the way. so go on.
Say, Paul, just I guess we focused a fair amount on what people might or businesses might be doing with their cash, but as in almost because of mine and Rob's sort of backgrounds and current trades, as it were. But I guess it's worth just reiterating, as a business ourselves at the moment, we are, as best we can, continuing to invest in the future of the business, as in often we're new-ish, so we are already quite technology-led, but that doesn't mean we can't do more. I know we're investing in, say, upgrading various bits of our marketing, for example, and looking at what tech we are using, how it works together, what could it do better, just to try and, I guess, whilst the cost base is typically going up, then how can we grow our top line over the future? And it's not now. It's not going to remarkably generate money today, but it's investing, cash that's not necessarily massively in surplus per se, but it's investing for that rather than thinking, well, do I go in the stock market or whatever? So as a business, look at your cash and think, what should it be doing? If it's not investing it, because that's not necessarily the right thing, is in investing in the stock market, invest in tech, invest in marketing, invest in people. And, some of that might be easier said than done, but I'm just mindful we focus quite a lot on that sort of investing rather than investing in the business of what that could do to grow it.
Yeah, and I think that's an important point. Often when times get hard for small businesses, they tend to put their head in the sand a little bit, and whilst to an extent they should be battening down the hatches and looking at costs that they needn't be incurring, they still need to be looking at the future if they feel they've got a sustainable business. And sometimes marketing. I know we're going off track a little bit, but sometimes marketing is something that goes out the window when businesses are finding a little bit hard, because that's potentially one of the worst things you could do, because you still need to be getting the message out there, arguably even more if times are hard rather than less. So I think it's worth looking at, not just probably how you invest funds, etc., but how you're investing or reinvesting that money or whatever back in your business to make sure that you're sustainable at the end of the day. So Neil, you're as a financial services practice, you do something, I guess, quite different in as much as you actually handle the investments for your clients rather than outsource it to a third party. So in climates like this, does that put more pressure on your colleague to make sure that he's investing in the right areas, or is it just sort of I don't know, just that question really? How does that work out for you guys?
Yeah, I guess it does to a fair degree put some more focus perhaps rather than maybe pressure, because in our view we have made some tweaks in this 2022, but we're always making tweaks. But it's all the things that we are investing in for our clients and ourselves, is it still the right thing for the future? Like I said earlier, we're not investing for people's tomorrow money per se, it's for their long term, which might include their pension for next week or next month. But it is, people will hopefully live long lives. So it's thinking about, is it the right thing still for the future? Have they got enough cash for what they need in the short term? That sort of planning. So yes, it has put some more focus, but we send updates to clients, keep them informed of our thinking, because if they see that, and like I have, value of my ISAs and pension going down, it's not very palatable. But equally, if you are informed about what's going on, what the thoughts are any changes being made, then there's a level of, okay, someone's thinking, whatever that is, and they're not just being left in the wilderness to go, oh, this is horrible. So it's just trying to keep people informed, really, and what we're going to do, if anything, to change.
Yeah.
But it will happen again and again. It's just, I think, because out of COVID, the markets have typically gone up quite nicely. Most people have almost forgotten. It's been a bit of a run since the financial crash, arguably. So it's a bit of a reset.
Yeah. Rob, so a lot of people tuning in either live or on the replay, that they'll probably have a financial advisor. I know not everybody does, but they'll probably have one. They might see them once a year, if ever. Well, what's your advice or recommendation to people? Well, what should they be doing with their financial advisor either now or on a regular basis to make sure that the financial advisor is advising them in the most effective way?
Okay, it's a good question, Paul, isn't it? I think really, in my training of people, where they do have an IFA, even where they don't, I strongly encourage them to get more involved with their IFA, not just to pass everything over and leave it to them completely and be ignorant of what's going on with all their pension money and their cash and funds. So I think, there is a real need. If you look at IFA's advisors, there's some really excellent ones, and Neil is one of them. I can promise you that, absolutely.
Thank God he said that, Neil.
Well, I'm very supportive of that. I am really. But on top of that, in every group of professional people, you'll get the keen, the enthusiastic, the knowledgeable ones, and you get the ones that are a bit tired and weary of it all, maybe, and you will get advisors who advise you in accordance with what the textbook tells them to do. And there are times when that can be very right and very good. There are other times when markets are changing when that is not good. And when, I can think back, for example, when I was an advisor to 1999, when actually, I don't know, it's just intuition, years of experience, even at that point, where I sensed the market was heading for trouble. And I couldn't pin it down exactly till I met a global economist who told me I was right. And I went back to my clients and we put 100% of their money into gilts. That's lending money to the British government, 100%. That's wrong, isn't it, Neil? You never do that. You never do that. But by golly, it was right. And we had the dot-com bubble. The market crashed by 30-odd%, and gilts carried on rising. The gap was huge. So that was my turning point, where I began to learn that, just simply textbook advice is not always right. And even now, the industry is challenging what it calls its traditional 60-40 model. Neil will be aware of that, I'm sure, as well. So, but I think it's learning, working with your IFAs, learning the questions to ask them, so that you can test for yourself whether they are truly market aware. So important that. If they're just textbook aware, that's one thing. Are they market aware? All these is so important. That's a huge difference in terms of. So please, if you're listening and you have an IFA, let's increase your understanding so you can work better with, not move away from, but work better with your IFA. You can take a bit more responsibility for what is happening to your money. Could tell you so many stories, but I'll talk all day if I do that, so I better stop.
Yeah, let's not do that, Rob. So yeah, I think yeah, I guess the general advice is, be communicating with your IFA, find out what they're doing with with your money and how they're investing it, and if they're making any changes given the current climate. So we'll do a few more minutes on this if you guys are willing. If not, then you can all sort of click the X button, but hopefully you'll stay with me. So with who knows what is coming our way for a small business and us as individuals. Do you think there's anything more the government could do, or any changes that the government could actually make that will ease up some of the pressure that we may be facing through inflation and higher costs of living? Neil, if you have any thoughts on that? Will, I know the government were very supportive, not to everybody, I appreciate that, but quite a few people during the lockdown times with the bounce back loans, etc., etc. Do you think there's any flexibility they've got to help out now in terms of what's going on?
Yeah, it's very tricky, and like you said, they did give out an enormous amount of support to various businesses and individuals, etc. So and they've got a tricky position, especially with inflation. So if they give people money, in whatever form, then it does have its way of finding its way back into, or people still buying more of stuff. So it can keep inflation stoked, especially like with wage rises and that sort of stuff. But I do totally acknowledge that often businesses and individuals need some more support. I mean, VAT is one that the government do seem to be able to change quite easily and quickly, and it can have a real benefit to people. It might not do much to businesses. Having said that, although if that allows them to reduce their prices because the VAT's cut, then that might trigger a bit more support, especially like in the entertainment and food eateries and that sort of stuff, perhaps. But I see it's so difficult for the government to do. But I think with the fuel, I mean, so many of the pressures are external to what the government can really control as well. So, or almost entirely. So yeah, ahead of the winter, the energy price is going to be horrible for people. So that's where I guess VAT, again, I think it's 5% on heating and that sort of stuff. That could be something to look at. It feels like one of the easier things to change relatively quickly to instill, and they can then flip it back should they wish, as they have done before. So that would be my thinking, but not sure how much it does for business.
No, sure. Rob, do you have any thoughts?
Well, I mean, I have a bit of broader thinking on it, really. I think, what I just sense that the message coming through now from the authorities that be is that, look, guys, we can't protect you from everything. We're getting to the point where you've got to stand on your own 2 feet or you fall. Now, when I looked at the volumes of money being given away, and I think quite rightly as well with COVID and all the human pressures that we go through, I begin to ask myself, is this still capitalism? What shade of capitalism are we in now? and are things changing? And how quickly will we get to some kind of universal income? Well, we all get £15,000 a year or something as a kind of a baseline. I mean, I don't know what you think, Neil. Do you think things are changing? Is capitalism still true capitalism, or are we moving to some new thing that we haven't given a title yet to?
Yeah.
Yeah.
But on that point, I did hear that I think it's the Welsh government are trialing a universal income or whatever they've called it for
So
care
interesting.
leavers. I think it is. So
Oh.
I guess the as sort of an answer is I like the idea that the government are willing, or I know they would kind of had to try some different things for certain sectors of the economy or certain businesses or certain people and their home situation. So I'm not sure of the answer to your question, but I like the idea, and I think the idea that they are willing, albeit have to be enforced, to try some different things is good and positive. But how far can it go? How long can it go? You're right, Paul, Rob. Sorry, in terms of the their stance of kind of you've got to stand on your 2 feet. But for individuals and a lot of families, that's nigh on impossible. The fall is not palatable. Business is not saying it is, but possibly it is. But yeah, it's very, very difficult. And I guess, like I said before, though, business will have to look to change things, whatever that model is. If it is a bit of investment, however unpalatable or unaffordable, but looking at something to help them grow and get through it. I guess I was hearing a story, and I know it's very, very different to our own experience at the moment, but in Ukraine, the way people are adapting and businesses are adapting in the real throes of of hell, it can be done. Things can be done. So I don't know. I'm not trying to compare, but nonetheless, there are ways that people and businesses can get through things which might seem otherwise very, very difficult.
Yeah. Any last points before we wrap this up, gents?
Well,
I guess.
Sorry, please.
Go on.
No. Okay. Just a quick thought I had in the back of my mind. 2 mistakes that I've made in my own business over my somewhat 80 years odd. One of those is to believe that I know what people need to hear from me and what they need to do. So I can invest money in my business through marketing and different activities to put some kind of a service together, only to find that was my belief that that's what they needed and wanted, but they didn't. I've invested all that time, energy, because time is money as well. I've invested all that time, energy, and money producing this wonderful service, which nobody actually wants. So that's a little warning to everybody in a small business. And the second thing is, I think you can have this dream about what your business is going to be, and you want new furniture all around you and stuff like that. So you spend money on new desks and new computers that you don't really need, because it's all a part of your vision, your perception, your dream, instead of the reality and the facts. And the other quick thing is the last thing to cut your expenditure on when things are hard is marketing. The harder the world becomes around you, the more you put into marketing, not the less. You need a big bold plan to break through, not shrink. If you shrink back, you're going to be dead before long in terms of a business situation. You've got to grow all the time, one way or the other, I think. Anyway, that's me.
Okay, Neil, anything finally from you?
Yeah, I get it builds on that. I guess it is, but I would go back to having a plan, whether it's personal or business. Think ahead, what's going to happen. Don't be too rosy thinking about it's all going to be great, because it won't. Something will happen, and just think about what that money could do. Then think about what to do with it. Options including investing in marketing, as we said. Is it investing some of it in the stock market one day? Maybe. But just having a plan, whether that's working with your accountant or IFA or whoever, just to take a step back and think about that plan. Because if you don't, I don't want to say the old adage of planning to fail malarkey, but that's so important, and perhaps now more so than ever.
Yeah. I think for me, you know, small business owners are quite a resilient lot. You know, they've had Brexit thrown at them, they've had COVID thrown at them. For those businesses that have been in business longer, they've had recessions thrown at them. And I think, you know, they are very adaptable. And my advice would be, you know, it's certainly in times of uncertainty, surround yourself with people that are going to be supportive and give you the type of advice that you need, be it financial, be it marketing, be it sales, be, you know, whatever pillar of business is, you know, just don't put your head in the sand, you know, talk to people, get advice, listen to people, and, you know, adapt if you need to. So thank you very much, gents, for joining me today. We're here every week, guys. So if you are listening to this on replay or tuning in, every Tuesday at 11 a.m, we look at a particular topic. We have a particular panel of experts. Next time we're looking at, is social media an important marketing tool or a valid marketing tool for you guys to use? So we've got 3 guys that will be joining us on that next Tuesday. So hopefully you'll be able to tune in. So we'll end it there, gentlemen. Thank you very much.
Thanks.